Good morning. This is Bloomberg Markets Today. I'm Guy Johnson alongside Kriti Gupta and Tom Mackenzie. Anna is off today, about an hour away from equity market trading. So what do you need to know this Monday morning? French political risk very much dominating the agenda. Campaigning officially gets underway today. EU leaders gather tonight in Brussels to discuss the next Commission president. Mario Draghi makes his case in a speech pushing for an aggressive European industrial policy. And in the UK, the leader of the Liberal Democrats, Ed Davey, tells this programme that the UK needs to get much closer to the EU if it's to lift its economy out of stagnation. Tom.
Let's check in on these markets then. European futures pointing higher so far, around 0.5%. But of course, the context is the sell-off that we saw last week, down around 2% by the end of the close on Friday, and diverging from the picture in the US, where the S&P ended up with gains of around 1.4%. We continue, of course, to monitor the political risk out of France. The FTSE 100 looking to gains of around 30 points, despite a bit of pressure coming through across the commodity space. 423 on your US benchmark 10-year yields pointing high by around 2 basis points after the gains for Treasuries last week. 108 or 106 and 94, I should say, squinting at the screen, is the single currency, of course, after the pressure that the euro came under last week. Markets today starting right now.
Good Monday morning. Welcome to the show. There's a lot to digest. Look, we're talking about the markets. We're talking about kind of the fallout of what we saw last week in terms of the ECB, in terms of the Fed as well. But now this week, of course, in terms of monetary policy, we're going to be talking a lot about the BOE, plenty of economic data and geopolitical speak as well that's going to be dominating the agenda. But I think everyone is in consensus when we can say geopolitics also driving the market narrative, specifically coming out of France.
Politics going to be the entire agenda this week. The BOE is not going to be a big event this week, I don't think, but French politics is. UK politics is starting to warm up as well, and I think becoming interesting as well. But the French political narrative really starting to churn these markets. We saw it last week. I've just been speaking to Michael Masika. He's going to be joining us a little bit later. And he was saying, you ain't seen nothing yet. If the left starts to gain traction, the impact on the French economy, the European economy, global markets, we are just at the beginning of this narrative. So maybe it's actually less of Le Pen and more of Mélenchon, though it won't be Mélenchon. It probably won't be Le Pen either, depending on who wins. But that's where the narrative is right now. French politics is having a big effect on global markets.
You mentioned politics, Guy.
I probably might have done, yeah. I think politics is going to be important this week.
Politics might be a thing.
Have I mentioned that before?
Yeah, is it politics?
I think it may be.
OK. It's remarkable. When you look at the poll, just a reminder, Macron's party is now polling third, to your point, around the fact that the left and elements of the extreme left have combined. And we'll see if that holds, of course, up to the first vote and then the second round. Does that start to break down? How sustainable is that? The socialists were part of the establishment. Now they're in bed with Mélenchon, with all the concerns about not just his economic agenda, but his political agenda as well, of course. We'll see if that holds. But for the moment, that is proving a significant threat.
Absolutely. It's interesting. Citi out with a note this morning. Beata Manthi out with a note this morning from Citi. We downgrade continental Europe from overweight to neutral in our global equity market strategy and upgrade the more growth-orientated United States. 3 reasons for the downgrade. 1, heightened political risk. Did I mention that? 2, narrowing market leadership. And 3, potential for a continued positioning unwind. Citi downgrading on politics this morning.
It's interesting that the narrative over the weekend is quite similar because, yes, there is always the debt sustainability issue, which I've been talking about for weeks now. This is kind of the nerdy take on what spending within the UK or within France may actually look like, which is going to potentially create some sort of third quarter 2023 market-esque move in the bond market. At least that's the fear for a lot of folks. But then there's that tariff policy that we're talking about. A lot of people are saying, look, this is really dependent on the U.S. election. Mario Draghi throwing that out of the water this morning. Talking over the weekend a little bit about what Europe's approach to China should be, saying that actually we should be taking a more protectionist approach. The quote on your screen right now saying, quote, we do not want to become protectionist in Europe, but we cannot be passive if the actions of others are threatening our prosperity, saying Europe is more vulnerable both to inaction on trade and to retaliation. So some strong words coming out of Draghi that could affect that industrial policy.
He wants a much more robust industrial policy. I just wonder whether he also wants Ursula von der Leyen's job. You've got European leaders gathering in Brussels tonight. Macron is going to be there. French politics, I suspect, will be dominant in terms of kind of setting the agenda. But who is next? Is it going to be von der Leyen? Is a weakened Macron going to change the narrative? How does Meloni play on the Draghi front? There's a lot going on here. But he is talking about a much more robust industrial policy. We're seeing it in China. We're seeing it in the United States. Could we see it in Europe? Is he potentially going to take that seat? The horse trading starts tonight, I think, in earnest.
And look, you've hit this before, Guy. How do you fund that industrial policy? If that more aggressive industrial policy, when Kriti highlighting the constraints around the French budget that it is about, how do you fund that, and what does it mean as well for longer term inflation?
So listening to Draghi speaking in Spain over the weekend, he seemed to be signalling that he doesn't think that actually Europe will be able to fund its way forward in terms of this joint approach that it took during the pandemic, the next generation funds. He doesn't think that's going to be viable. But to your point, Tom, that is the most obvious route for figuring out how that industrial policy, investing in the green industrial transition, though voters don't seem so keen on that right now, and defence and all the other kind of things that we're talking about right now, he's less convinced, it sounds, that you could do that jointly.
I also find it fascinating, again, we're bringing it back to the market narrative here, right? There's so many cross currents, as Guy points out. And then how do you price it in these markets? And the reaction seems to simply be sell off, don't buy. You had Beata Manthe talking about it in the equity market. This week, I believe, we've got a bond auction coming out of France as well.
Thursday.
I want to say on Thursday,
yep.
Yeah. And I'm curious what that means in terms of just fund flows, right? Does that then create a bid into the UK equity market, the UK bond market, for example, ahead of the BOE? You're seeing some real strength coming out of cable, for example, on the back of it. Same story into the States. Do you start to see this kind of fund flow story simply as a function of not wanting to be invested in Europe right now?
So that's on the economics and, of course, the focus on the finance. But there's also a question mark, particularly around Marine Le Pen's party and Mélenchon's party, frankly, around their support or not of Ukraine, where they land on the question of Russia. And geopolitics was back in focus for us as well over the weekend with that peace summit over in Switzerland. Absolutely.
And European politics is really putting this in flux, to your point. It's going to be really interesting to see what does the next UK government do? Maybe less on Ukraine, but potentially on Israel. What does the next French government do, potentially on Ukraine and potentially on Israel? There's lots of different things that could be changing over the very near future, and it's going to be interesting to see how that geopolitical story folds in. China, I think, is also interesting as well. The data that we've seen out overnight, what do you make of that? It seems that actually there's a little bit of a pickup in the retail, but overall the housing market remains really weak, and the industrial data remains really weak. And China, bringing it back to the Draghi stuff, feels like it's been increasingly hemmed in by the industrial policy, the tariff policy of the United States, and increasingly of Europe.
Yeah, absolutely. Where does China turn? It has this overcapacity. We talk about the EV structure. Can it continue to ship into Latin America and make up that Southeast Asia? Yep. If the markets around Europe close or at least become more challenging, we know the tariffs are now in place, even as Germany and Olaf Scholz pushes back. I think we're talking like the wider market impact now. You saying that the Bank of England is likely to be less important in terms of the versus politics this week.
It feels like it's August or September for the Bank of England. It doesn't feel like it's this meeting, and they're also in purdah, and as much as they don't want to talk because of the politics. So it feels like you can park that one maybe for this week.
Temporarily, and then, and then come Friday, it feels like there's going to be some sort of reckoning, at least in the FX market. Euro sterling seems to be a little out of whack because of what you've seen in terms of French politics. We're going to dive into the market dynamics later into the show in terms of that. But you mentioned the South in terms of China and in terms of reaching out to Latin America, et cetera. This is a similar approach that Giorgia Meloni is using as well. Take a look at what she said in the G7. Not to bring it back to the politics here, but she was really talking about collaboration with Modi, collaboration with Milei in Argentina. This is significant, especially when we talk about where those inflationary pressures in the long term are going to come from. You see this kind of re-globalization, deglobalization, fragmentation, if you will, pick your word, when it comes to reassessing how these new kind of narratives are taking place, especially with tariffs looming over everyone.
Tariffs are inflationary. Inflation continues to be the big challenge right now. You saw it in the University of Michigan data Friday. Joanna Shu's numbers really highlighting once again this concern around the consumer, driven largely by this re-emergence, this re-acceleration, it seems, in the consumer's head to what is happening on the inflation front.
Consumer sentiment falling in terms of. So, at what point does a weaker consumer? The consumer is not. I mean, there's a political story to this as well.
Yeah.
But the consumer in the US is not feeling bullish. They're not feeling happy. We've seen the softness in the labour market. Yes, 4% unemployment. It's a marked number, of course, in the context of what we're seeing in Europe. still a relatively benign picture. But when does that start to have an effect and start to edge down and start to really weigh on the inflation story that, Guy, you were highlighting?
Well, it's interesting that we're talking about that because what are the odds that in just the last, we had pretty strong, better than expected CPI data on Wednesday. We had some interesting kind of commentary on Wednesday as well from Chair Powell. 2 days later, we see the consumer sentiment data that's completely indicating the opposite, and the market's reacting pretty heavily on the back of that. Maybe we'll get a little bit more color this week as well when we tend to get plenty of central bank speak coming out, not only today, but throughout the rest of the week as well. Whereas on Thursday, we get the BOE. They are in a blackout period. There's plenty of Fed speak, plenty of ECB speak in the meantime. Some of that coming out today as well. Harker and Lane, of course, due to hit the tape. On Tuesday, though, it's also lots of data as well. You got retail sales, you got Euro area CPI, and we mentioned the BOE on Thursday, but don't forget we had the RBA on Tuesday as well. We're talking about inflationary impulses. We're talking about the commodity story. The RBA can be a little bit of a canary in the coal mine when we watch that story. Plus, of course, the Norges Bank, the S&B, plenty going on there as well. And, of course, the Japanese CPI is one that we're watching quite a bit. I believe on Friday we talked about the BOJ quite aggressively in terms of what they're talking about. CPI numbers coming out of Japan. Very important.
Can I just pick up on one point? Because you talked about the flows from France into the UK. A headline dropping just in the last 5 minutes or so on the Bloomberg. The UK overtaking France as Europe's biggest stock market. There we go.
As of Friday's close, I imagine.
As of Friday's close.
Yeah.
And by the way, we won against Serbia. I don't know if there's a linkage there.
I only just, though,
Thank you.
About only just,
Jude. Yeah.
Bellingham kind of... The rest of the team looking quite nervous. He didn't. He was the only player that didn't look. I've watched the highlights this morning. I went to bed early last night. I also didn't get to... I thought McIlroy might have it at one point. I genuinely thought at one point this might be the US Open, but no. I woke up this morning, check my headlines. England won 1-0, just.
Yeah.
And McIlroy didn't win the
It's
Open.
the volatility of Guy Johnson's sporting reaction to the results when he wakes up first thing.
I didn't check the markets this morning. The first thing I checked was what exactly was the outcome in the two key sporting events that I went to bed last night trying to watch two different screens.
Did you watch Germany-Scotland on Friday?
I watched a bit of that, yep. To be honest... That was
my only
addition
value
add to this. You have a take on Germany versus Scotland?
I was Germany all the way. I said that, I think, on the air on Friday.
Goodness.
And I think Scotland did
Where's my
kilt?
kilt? I need to dust off the Mackenzie kilt at this point.
I'm sorry.
Or maybe not. Sorry. Let's move on quickly. Guy Johnson. You've been talking to... McIlroy. Back to the golf. You don't want to be talking about politics.
I could talk about Ed Davey as well. Liberal Democrats on Friday. Funnily enough, at a football club. A soccer club, a football club, Isha Football Club. That's where I met him. In the rain and the wind and actually the lightning. But I had to say Ed Davey quite stoic in terms of his approach to the weather. Pointing basically to the idea that the UK is... If you want to reignite this economy, if you want to give... I asked him kind of, is this a business-friendly agenda? Because he's talking about raising taxes on business on a number of different fronts. He said, yeah, basically what we want to do is create an economy that has the staff and the people that it needs to be able to build the economy. But we also think that a closer relationship with the EU is the way to go in terms of revitalising this economy. We are the only party that's talking about that. So he certainly... It's interesting, given the turbulence we're seeing in Europe, how that kind of relationship with the EU could evolve, given the new kind of political narrative that could be evolving in Europe.
They've been a little bit more circumspect in terms of their views on rejoining the EU, haven't they? So he's talking about the time frame, wanting to give it time to join the single market. But a full embrace of the EU is not yet on the agenda. No,
he said... I asked him, why is it on page 100? He said, because that's where our international section is. But, yeah, it's going to be interesting to see whether or not it would be more front and centre were he to win more seats. The leader of the Liberal Democrat Party talking to me over the weekend. We'll get more on that a little bit later. We'll bring you that interview with Ed Davey in the wind and the rain at Isha Football Club. Plus, we're going to talk about what is happening tonight. EU leaders gathering for summit talks with France's decision to call a snap parliamentary election, certainly looming over discussions. We're going to look at what we can expect. Mario Draghi, I suspect, is high on the agenda. If you want to join the debate this morning, there is lots to talk about this morning, isn't there? IB Plus, BBTV Go is the function on your Bloomberg. No wind and rain this morning. Look at that. Blue sky over London. This is Bloomberg.
There is a pattern of populist leaders being feared by markets and then getting elected and actually not doing that much.
From a market
stuff.
perspective, that maybe was the US in 2016, was it?
Yeah.
Correct. And, even in France, the potential for a cohabitation, for a, parliament that is in the far right and a Macron president at the same time is not that bad.
Alberto Gallo, Andromeda Capital Management CIO, basically saying you don't need to fear the populist leaders, at least when it comes to this market sell-off, saying that it is actually indeed overdone. A little bit of a contrarian approach at the moment, given the sell-off you're seeing across the bond market, the equity market. We'll add another view to that story. Michael Metcalfe, head of macro strategy over at State Street Global Markets, joins us this morning. Pleasure to have you on the program. Is he wrong? What do you do?
Well, it's an interesting point, though, isn't it? Because I think we've been through a similar scenario with Italy, where markets weren't quite sure what to make of Meloni, and actually, since she's been in, markets have been fairly calm, and some of the more extreme policies haven't arrived. So, I think there is a precedent there, as in a past example, not a President Le Pen, obviously. But I think right now there's no doubt that the market is trading the narrative, and I think it just shows that markets were priced for perfection. We've been saying that for a while, and they're not really getting it.
But this feels kind of like a panic and sell and more of a fund flow story. What entices investors back into not just the French market, but the European market?
So I think you're right. So going into this, investors were neutrally positioned on Eurozone equities as a whole. Now, interestingly, they were already quite underweight the euro. So what I would look for, actually, is for the euro to stabilize first. So I think that's where investors were ready for some bad European news, and then maybe the equity market will follow. But I think it was just because investors were just coming back into Europe, and then they've just been hit with this surprise, because we didn't really factor in political risk in Europe this year.
Nobody saw the French risk coming, and we've spent a week and a bit digesting the fact that is now a risk that we need to manage. Have we got to the point yet where we really understand, what if the left wins? People are talking about Le Pen. What if the left wins? The economic agenda that they're proposing is so out of kilter with what's happening in the rest of Europe. Do you think how far through this journey do you think we are? How quickly do you think markets are able to get their arms around understanding the scale of the risk? Not just the fact that there is a risk, the scale of the risk that potentially a left-wing win in France could pose. Wow, that's hard to say.
Yeah. Well, look, I think right now, and obviously I think you probably have to wait to the first round and the first round results and the polling going into it. But you can definitely, as you say, there are some quite extreme policies potentially on the table. Yep. But if they're just potentially, what probability does the market need to assign to it? So I think it's going to be dependent on polling and then the first round results, and then we see where we go from there. But I think right now we've gone from pricing in obviously no political risk to, quite a bit. There has been a movement, and as I said, I think particularly in the currency, I think investors were, they'd been reluctant to buy the euro all year and have been proved right.
How do you think markets would react if we get a more positive signal coming out of the next government in the UK towards the EU? Looking at a headline, front page of the FT on the website right now, Rachel Reeves to seek improved UK-EU trade terms if Labour wins the election. I spoke to Ed Davey of the Liberal Democrats over the weekend, very much pushing the idea that we need to have closer relationships with Europe, and that would be the way that you relaunch the UK economy. If you were to get that political narrative starting to develop and it was reciprocated out of the EU, how big a positive would that be for UK assets?
It's interesting. So while you were doing your sports reports on the way in, I was reading that article, actually. Yeah. And it is...
You got to watch the game, so...
I also got to watch the game, that's true. But look, I think this is potentially a positive story. The only thing I would just hesitate with is, look, and we saw this in Mexico a couple of weeks ago, is that when you get a very kind of affirmative vote in one direction, the market seems to get concerned that there's no kind of check from the opposition. So I think that's just one thing to consider in the UK. But look, as the article highlights quite nicely, Labour, in economic terms, it's almost continuation. So there's continuation of a lot of the economic policies, but then potentially closer ties to the EU. So that is all a positive. And the one thing that we note, which I think is interesting this year, is that while investors have been very reluctant to buy the euro, they have squared their underweight in sterling. And they've continued to square that underweight, even though you've had the, the earlier election announcement.
What is behind that? Is that BOE higher for longer? Is it the data looking a little bit more resilient in the UK? What is feeding into that?
I would say I'd say it's a bit of both. I mean, I think in general, sterling demand has correlated quite well with relative rate expectations. So I think it's a little bit of that. I think the flip side of it actually was that investors were becoming more doubtful on their overweight dollar position, but they decided to go into sterling, not the euro, which I think is interesting.
What do you do with the US at this point?
Yeah, so look, I think the US we're in a little bit of a holding pattern now because I think we're getting clearer signs now that the economy is softening, just at the point where the Fed has backed away from the immediate rate cut promise. So I think if it wasn't for the European election news, it would be very clearly a dollar unwind story. Because rate cuts can become to be priced back in as the economy softens. But I think we're hesitating now because we've got this European political risk.
I'm having a little bit of deja vu when we're talking about the U.S. and election risk and political risk and potentially tariffs over as well. Mario Draghi making some strong comments over the weekend talking about kind of that protectionist policy that Europe may have to embrace even further than it already has. In terms of the market narrative, 8 years ago in 2016, basically, when you're talking about these tariffs, it was a pretty easy equation to do. You look at the terms of trade, the country that's more affected by the tariffs, that's the one you sell off. Is it that simple this time around?
Well, I mean, the tariff narrative itself, if you go all the way back to 16, has changed completely. In that, when Trump was talking about tariffs in 16, it was, overwhelmingly seen as a negative thing, and it was only the U.S. And whereas now, we've got global industrial policy. So, everyone is trying to kind of protect their own countries. And so I think it's a much maturer narrative now. But that said, obviously, look, I mean, we've just seen an incredible amount of volatility in the Mexican peso, as an example.
Yeah.
And so, I do think that the tariff narrative is worth tracking because it is going to be a factor for markets, no doubt.
Is it too simplistic to say you buy protectionism or you buy defense investment? What is the green flag in terms of investing?
Well, look, I think, look, clearly because of international conflict, there's a very positive story towards defensive stocks and for the defense industry. So probably both, actually, you could say. But in terms of on the international side, you're going to look for the governments that have got the more proactive policy, ironically. So it's almost the reverse of where we were in 16, right?
The challenge many people have at the moment when they look at their portfolios is that tech continues to outperform. That is where you are. If you want outperformance, that is the place you've got to go. If you want a diversified portfolio, you have just got to accept that you are going to underperform that particular narrative. Given the political risk that we now face, we're building up to November. It feels like kind of Europe is the starting of this process. Then we're building up to November. Do you have to accept underperformance right now in order to protect your portfolio? Do you have to have that diversified portfolio and forsake the gains that tech are delivering just to protect yourself as you work your way through this year?
Yeah, look, I think that's right. And look, everyone is wrestling with the concentration in tech, and you look at the kind of the signals from small caps in particular,
terrible,
which are telling you there's a cyclical concern.
Yep.
Right. So that is real. So markets were priced for this perfect cycle, and it just isn't coming. That's the reality. But I think to your point on diversification, if we're thinking about political risk by definition is country risk. Yep. And so you have to be diversified internationally. And actually, I think in particular, I mean, interestingly, so I get no prizes for telling you that biggest overweight is in the US and in tech.
Yep.
Flip side of it is in emerging markets. Now, we've just gotten through our emerging market risk, so that's where the underweight is.
OK, Michael Metcalfe, thank you very much indeed. Head of macro strategy at State Street Global Markets on the political risk in these markets and how to position. Coming up, French turmoil, talking of which, looms, of course, over the EU summit, which kicks off later. Stay with us. This is Bloomberg.
Welcome back to Markets Today. We're about 30 minutes from the start of today's trade. When you look at the futures picture, a little bit of green on the screen. Euro Stoxx 50 futures higher by 0.6%. When you look at the bond market as well, you're seeing a similar story. Some of this just feels like even though the geopolitical risk kind of looms over everyone, perhaps a little bit of a technical paring back of last week's market reaction. 106.95, by the way, on euro dollar. So you continue to see that weakness in the FX and the bond space. Well, let's get into why that is, specifically in France, where far-right leader Marine Le Pen says she won't try to push out President Emmanuel Macron if she wins the country's snap parliamentary election. Let's get a little bit more on these comments. In the context there, Bloomberg's Stephen Carroll joins us right here on set. Walk us through the thinking behind these comments. Why is it so significant?
Look, this is clearly a pitch for Marine Le Pen to the centrist voters, to those voters that she hasn't so far managed to attract. She was asked in an interview with Le Figaro whether or not she would call for Emmanuel Macron to resign if her party comes first in the parliamentary elections, the first round of which is happening on the 30th of June. And she said she will respect the institutions and she will not call for institutional chaos. In her words, there will be simply cohabitation. This is the system where you have the president from one party and the prime minister from another. So essentially what she's trying to say is that she won't try to dislodge Emmanuel Macron from his job and perhaps cause more problems for the markets on one side, but also the governing of France on the other. This is interesting because we are looking at that party leading in the polls as well. The National Rally coming out 35% in the poll over the weekend. It's a question also of how much the programme, the economic programme in particular, is going to be in focus for the National Rally as well. We don't have full details of it. Some of the measures they have announced, like cutting the rate of VAT on certain food products and also on energy, that's something that the French Finance Ministry has costed at around 20 billion euros. A concern when France's public finances are already in focus, and a worry for markets too. That's part of what we see in the reaction. On that point, Marine Le Pen says the financial markets will understand the economic programme when they get it, and they will find it reasonable.
And Macron and his party, the Renaissance Party, have been squeezed by not just the right, but the left as well, and the combination that's come together, that coalition, even as fragile as it may be. What is the response then? What is Macron's party doing to fend off these dual threats?
Well, at the moment, they're essentially saying that both of these options will lead to chaos. The Finance Minister, Bruno Le Maire, from Macron's party, was out over the weekend talking about this, and he said that both the choice of the left alliance, which brings together the far left and the moderate left parties, and the far right, will make French people poorer. That was his message. He says that it's still possible for his party to win this election. Looking at the polls, as you say, they're in third behind the Left Alliance and the far right as well. We're into the heat of the election campaign now. Nominations for candidates closed last night, which means that people now know who they can vote for. The two-round electoral system means that you could end up in a situation, if you look at those poll numbers, where when it comes to the second round, people will have a choice of the left-wing alliance or the far right. Macron's party might not even be in the running. We saw protests over the weekend in France, tens of thousands of people out talking, opposing Marine Le Pen's policies on things, part of her central policy platforms as well. That's part of the dynamic as well. It's also worth considering that this left alliance is quite fragile. That may not provide certainty either to markets, and some of those economic policies also a concern.
Everybody seems to be focusing on the threat from the right, economically. But if you look at kind of what the left is saying, potentially that has a much greater effect, to your point, on the French economy, on the European economy, on France's place in Europe, than the right does. Are we underestimating, is the rest of the world, is the rest of Europe kind of focusing too much on Le Pen as the threat and potentially underplaying the threat that the left poses? Certainly the markets are still trying to grapple with the right. It feels like they've barely even started to price in the left.
It depends on what you consider a threat. If we're looking at it from the market's point of view, we don't have the full economic programme for the National Rally. They say that they will aim for stability. But the issue with the left is this programme, this alliance, was thrown together in a hurry because it was a snap election. A lot of the policies that we see in the economic front are policies that come from the France Unbowed Party, the party of the far left. Things like blocking the prices of essential goods, price controls, which we know don't usually have economically very good results. That's something that is very concerning for markets. The question would be is how many of those policies would make it into a final programme if the left party were to come out on top. And also this question of where Macron's party fits into this after the election as well. How many seats do they have? Will they be looking for coalition partners, or will they be frozen out altogether?
All right, Bloomberg's Stephen Carroll bringing us that crucial context on the various shades of the turmoil in France. We thank you so much. It's also something that's going to be looming over the EU Leaders Summit, which kicks off later today in Brussels. All over that story, Bloomberg's Oliver Crook joins us out of Berlin. Ollie, walk us through the dynamics at play in Brussels right now.
Yeah, so basically this is the first sort of actual EU leaders meeting since the actual election and the outcome, and this is where they basically come together and hash out all of these sort of top jobs. Of course, as you can imagine, they were all at the G7 meeting over the weekend. This is surely something that came up during those discussions, but this is the first time that these EU leaders sit down together in Brussels and start talking about the jobs. So listen, if we want to look at the actual jobs themselves, a lot was made about Ursula von der Leyen, what her position would be, how strong would she be as a possible candidate again in the European Commission, just given where the votes fell. Since the EPP did really so well, that seems to really have solidified her at the sort of top at the EU Commission. We also understand that Antonio Costa, the former Prime Minister of Portugal, will likely be the European Council president. That is a post currently occupied by Charles Michel. And then very interesting here, the Estonian Prime Minister, Kaja Kallas, the High Representative to probably replace Joseph Borrell. She has been, of course, one of the most concerned, one of the most hawkish about Russia and Ukraine. That'll be a very interesting dynamic coming into this commission, particularly when there's been all these other discussions about potentially starting a whole other new commission within the EU on defense, which currently does not exist.
Ollie, what is the conversation around Macron likely to be within this meeting? To what extent is that going to overshadow these conversations?
Well, I think there's no way around it that this is going to just basically detract from his power and his ability to influence things. I mean, remember, part of the reason there was some questions about Ursula von der Leyen having another crack at the presidency of the Commission was that Macron, apparently in sort of closed-door conversations in the back rooms, was talking about maybe putting forward Mario Draghi. Obviously, he does not have the sort of wind in his sail to pull those kinds of stunts anymore, and he's really solely focused on what's going on in France. And even at the G7 meeting, we were there, went to one of the sort of scrums, the press, when Macron went out in front of journalists, no one was interested in his position on, these lofty subjects of global trade, Ukraine. It was all about the chaos that's going on in France. And that is just an absolutely huge distraction right now, not only for him, but also just detracting from his influence.
In terms of, therefore, who has influence, the Germans are also distracted at the moment. There's a lot going on there. Who has influence over this decision right now, and how different is that versus where we were even a few weeks ago?
So I think that what's really interesting is that, a few weeks ago going into this election, there were a lot of questions, again, around Ursula von der Leyen. She has sort of appeared as to being completely buttressed by this whole thing. I mean, she has a slightly bit of an abstract role as European Commission president. It doesn't sort of come with the same powers and sort of gravitas necessarily as a national leader, but she has definitely been reinforced. And of course, Guy, Giorgia Meloni, right? This sort of G7 was a kind of coronation of Giorgia Meloni and the sort of new far right. And this is really kind of the playbook that Marine Le Pen, as we've been seeing and you were discussing with Stephen, is trying to sort of to play from, basically saying, we have historically been the far right, but actually we're actually quite reasonable on this, that, and the other, and you shouldn't be so afraid. And that is exactly what she has done. And she's basically the most effective and the most sort of powerful leader within the European Union as far as their sort of personal mandate goes right now.
Maybe we do discount Draghi. Maybe Macron's backing doesn't exist in the way that it once did. But Draghi is pushing forward this agenda that is much more protectionist, that feels much more akin to what we're seeing coming out of the United States, out of China to a certain extent as well. How is what he is saying, and others are saying as well, shaping what industrial policy is going to look like? How strong, how different will industrial policy look in this new commission, given the fact that this idea of this sort of passive industrial policy that we've had in the past here in Europe no longer makes the cut?
I think just sort of disentangling this is really interesting. So first of all, Draghi has been tasked with coming up with this huge competition report, right? Some 400 pages. And what's interesting is we get these sort of speeches every couple of months where he sort of drip feeds kind of teasers about what he's going to be sort of talking about. This one was really based on productivity. But as you say, Guy, what's sort of interesting here was it was one of the most sort of aggressive and just sort of completely blatant advocating for the use of tariffs and the use of subsidies, not as a sort of to try to take an economic advantage, but to level the playing field. And that coming from Mario Draghi, sort of old school institutionalist of the EU, is, I think, significant. And I think also with the sort of EU that's tacked a bit more further to the right, this question of defense and industrial policy, this is going to be front and center. And maybe there is consensus there. Maybe there is a way to sort of move things forward. But again, the interesting thing with Mario Draghi, and again, this is probably my own bias, having spent so many years listening to every word he speaks of, there's so much in this speech sort of between the lines talking about, the Europe does not function like the United States. They're not willing to sort of do joint debt yet, right? Teasing to that. But then also the fact that they have a huge disadvantage because they don't have a federal budget, right? Is that another tease? Is that a conversation that needs to begin to happen in Europe? I think all of these things are on the table at this stage.
OK, Oliver Crook, thank you very much indeed with the context around this EU summit. Ollie, we appreciate it. Coming up, we're going to take a look at your stocks to watch, including ING, the lender holding its capital markets day today, expecting rising profitability as it seeks to grow fee income. That's coming up. This is Bloomberg.
Monday the 17th, 43 minutes past the hour. Welcome back. This is what you're looking at in terms of the picture around markets this morning. Equity markets feeling a little bit more positive, but keep an eye on the bond market. That is once again where the action is this morning. Take a look at the OAT Bund spread, France versus Germany, 80 bips. We're at 80 bips, folks. People were talking about 60 being kind of a point in time that we need to focus on. Then it was 70. Now we're at 80. How much further could we go? If you continue to see the left or the right gaining traction, is this something that goes significantly wider from here? Big auction coming up on Thursday. Let's get a take from Bloomberg's Markets Live, Ven Ram, to get a take on what is happening here. Ven, let's talk a little bit about what is going on. 80 bips. We're at 80 bips, OAT Bunds. How much wider do you think that could go?
That's going to go another 20, 25 basis points further for the guy. Why do I say that? Because if you look at French bonds, the 10-year yield is offering around 3.22. If you look at the Italian yield, it's at 3.92. Now, Italian debt is rated much lower than France, of course, so the two are not comparable. But you know, S&P already lowered the rating on France's credit rating to AA-. So the market's fears are what happens if the National Rally comes to power, or if the left coalition comes to power, or you know, some combination of it. So the markets have to price that risk, and where that will take us is somewhere at an intermediate point between France and Italy. So that will mean about another 20, 25 basis points on the French 10-year yield guy.
Is 100 bips between France and Germany sustainable? What happens at that point?
Well, it all depends on what happens after July 7th. If we get to know the results are more investor-friendly, then obviously French bonds will rally. If, on the other hand, the National Rally comes out and says, you know, we're not as much to be feared as the markets are fearing us, our policies are going to be more market-friendly, i.e. the fiscal deficit isn't going to blow out, we are going to contain fiscal deficit, then that will send a message of reassurance to investors. That is when you want to pile back into French bonds. So over the long term, if everything goes well, if there is no Frexit, then 100 basis points or thereabouts would be a level to buy back into French government bonds. But that is not the point we are at yet.
But is there a new, in 10 seconds, is there a new fair value that is higher than it was but lower than potentially we're going to? In 10 seconds.
Yeah. That's about another 20, 25 basis points in yield because the bonds are already trading at a discount. There's more to go.
All right, Ben, that's the bond markets. Don't go anywhere because I want to get your take on the FX market as well. There is a chart that caught my eye when we're talking about this dynamic that we're seeing in continental Europe. Of course, pressuring the euro. A lot of this has been French-driven. But take a look at what it's doing between euro sterling. It's this chart. It's a very simple one. We're just looking at the intraday moves year-to-date for euro sterling right now. And you can kind of see that between January to, I want to say, mid-April, before that red line really hits, it's kind of largely been trading in a little bit of a range. The idea here simply being that it's really all driven by monetary policy, really all driven by the inflation narrative until, of course, we've seen some real weakness in the euro, some of that coming off of the German data, but then, of course, really accelerated by the French story. On the back of that, you have seen the pound strengthen and really benefit from those fund flows. And it really just shows just how quickly that currency pair has weakened. That being said, Ben, this week, we've got the BOE coming out with their rate decision on Thursday, perhaps giving us a little bit more insight on their strategy as well. What happens to euro sterling on Friday morning?
I think euro sterling is going to stay on the defensive because what is the BOE going to tell us? The BOE, of course, in June they are not going to do anything because we've got the elections in July. But beyond then, what are they going to do is the question. The markets are thinking they will get 2 rate cuts from the Bank of England. I think that's a tall order by the end of this year. Why do I say that? Because if you look at services inflation, it's hovering around 6%. excuse me, it's hovering around 6%. If you look at core inflation, it's at 3.9%. So, you know, the real policy rate for the Bank of England is about 100, 110 basis points, depending on how you parse it. So if that's not too much of a wiggle room to cut rates yet, which is why I think that sterling will continue to be bid, and the euro is going to be a lot more defensive because, you know, as we just discussed, there's the French political risk, and that story has got further to play out. So investors are not going to be in a position to be piling back onto the euro just yet. So euro sterling is the best bet to reflect those sentiments where euro is going to be on the back foot.
OK, more downside for euro sterling, more to be priced into the pound. What level are you looking at then, Ven? How much more upside do you see for the pound at this point?
Well, if you look at the options market, the volatility pricing is such that they are pricing in about a level of 80 to 80 in the next 1 to 3 months. So I think that is what the markets are bracing for. It doesn't necessarily mean that we'll get to those levels, but I do think that 83.50 or 83.20 is possible from here.
Ven, great stuff. Thanks for joining us. Really appreciate it. Ven Ram joining us from our M Live team. You can catch up with Ven. You can catch up with all the fantastic members of the Markets Live team. You can do so on your terminal. They're waiting for you. You can find them MLIV Go. That's the function. It's great stuff. Let's take a look at the single stock story we need to be watching as well this morning. Joe Easton's got the details of that. Joe.
Morning, guys. So we're starting in the banking space. We've got some pretty strong numbers coming out of ING in terms of their capital markets day. They've released a statement ahead of that investor conference and giving some guidance on their fee income, expecting €5 billion of fee income through 2027 and also a 14% targeted return on equity through that period as well. Now, these numbers getting a strong reading as we're seeing some gains on the Tradegate exchange for this one already this morning. They've reaffirmed their CET1 capital ratio as well, potentially a good thing for their buyback outlook. Now, here's a stock on the year-to-date screen, done pretty well. There has been some easing concerns around the Dutch tax on buybacks, which has boosted that one for the market. And I think in terms of the analyst ratings, we've also got a good make-up there as well. 15 buys, only a couple of sells on that stock. But as I say, we are seeing some decent gains in that one this morning. Then in terms of the UK, we're looking at Hargreaves Lansdown because there's a bidding deadline coming up on Wednesday. An Abu Dhabi-led group has bid for the company, and that is the massive gain that we've seen in that stock this year. It's up around 40% year to date, but they have until 5 p.m. on Wednesday to make a firm bid. Now, one of the founders, Stephen Lansdown, was speaking to the FT at the weekend, and he was saying that they're not just concerned with the price, they want it to go to the right holder. And here's a quote from them: "Price is not the main consideration if it's not taking on the business the right way." So he says there's more to it than the price, but that will be key to see if this deal gets over the line later in the week. If we look on a 5-year view on this chart, it's down massively against where it was during the pandemic, given the boom in online investing at home. So that will potentially be taken into account when they're thinking about what price to accept. We can see a steep drop in that one, 45% over 5 years, with that bidding deadline coming up. Finally, we're mentioning Cristiano Ronaldo on stocks to watch for the first time because he is buying a stake in a small company over in Portugal called Vista Alegre, according to a statement over the weekend. There he is on the screen, getting his head on a ball. But he is buying a 10% stake in this company. The company makes porcelain, ceramic, crystal glassware, something we probably don't associate with Ronaldo normally. He is the 5-time Ballon d'Or winner and has a reported salary of around 200 million. The company's market cap is only around 150 million euros, so I think he can afford a 10% stake in that one. There's a stock over the 1 year, up 32%. You have to think that might be a positive if Ronaldo is getting involved. Keep an eye on that one on the small cap exchange over in Portugal today.
Joe, did you say crystalware?
I think so,
yeah. I could see that on a Guy Johnson shelf in the Manor.
To be fair, Ronaldo's got a lot of trophies, crystalware. I imagine that is
you think it makes sense. Joe, what do you make of the result? England?
We played well for half an hour and then we sort of did the usual thing with where we crumbled away and almost gave away the lead. But, yeah, we started with a win. We'll see where we go.
All right, Joe Easton, thank you very much indeed. Checking on the stocks to watch, but also with that football commentary as well, of course, with the Euros in focus for us. Joe, thank you very much indeed. Coming up, it is, of course, the market open. We're looking actually at a relatively constructive session, obviously, with the context of the sell-off that we saw in Europe last week. Currently, futures pointing higher, guys, by 0.7%.
Yeah, it was a tough week last week, though, wasn't it?
Yeah.
Just maybe a little sort of stability coming back in. Be interesting to see how sustainable ultimately that is as we work our way towards the first French vote. Politics, started the show talking about it. That's the bit that the market, we don't know enough about what the French various parties are doing or proposing yet to make an accurate kind of assessment of what the risk really is.
But I think for the equity market, it's starting to become a function of what you're seeing in the bond and the FX market. So if you start to see real euro weakness, does that incentivize fund flows into buying kind of cheaper European equities? That's at least one take that may show up. Already you're seeing widening in the spreads.
Isn't that already, though, a reflection, if you get a weakening euro, of money leaving Europe?
Yes, but it could also incentivize it, right? It's both. It's both. And I think if you're an international investor that's seeing, say, the FTSE 100 recently hitting a record high, for example, in the last, I want to say, 2 months or so, and you're looking for an option to buy, this might be it.
And there's a sweet spot, possibly then, on euro that some are looking at, and they think that's the sweet spot.
But does money come out of continental Europe and go into the UK market? I wonder whether that, if you want to keep money in Europe, maybe that's the switch that you make as well. Yeah,
especially when you're looking at maybe some of the stocks that are trying to benefit from, say, even the consumer resilience story. Isn't that been the theme that we're seeing overall? Even to access that, you need a weaker euro to incentivize that and even offset some of these stocks that are at really higher valuations. I'm thinking about your sensational six. You should be smiling right now.
Well, yeah, but they're ones, I appreciate the, but they are, a lot of those are dollar earners.
True. So you still buy them in euros.
You can, but then you've got to factor in the top line in dollars. Be interesting to see how that one works this morning. Anyway, the market open is coming up. We'll talk about all of that next. Single stock stories to the macro. This is Bloomberg. Monday the 17th of June, 2 minutes to go until the start of equity trading here in Europe. Doesn't look like we're going to see any real single stock action today. I'm just looking through the list of names out there. There's no kind of obvious, clear narratives that we want to talk about when it comes to single stocks. This is a market that continues to be dominated by the macro picture. What is coming out of France is having not only European effects, but global effects as well, and is likely to continue to do so throughout the rest of this week. This morning, maybe some stabilisation, but it's going to be a long week. I think people kind of joke about a week being a long time in politics. This week could be a very long week.
At what point, after a 2% sell-off across European stocks last week, a 6% sell-off on the CAC 40, and a double-digit sell-off for French banks, do you decide that the value is now there to dip back in, that you start to assume that whoever comes in as Prime Minister is going to reshape around a Maloney character, and that you can afford to dip back in to French equities?
When I think you understand the risk. At the moment, you are understanding you've got uncertainty. You don't have risk. Markets struggle to price uncertainty. Once they understand what the kind of various options are, then you can start kind of figuring that out. But we're not there yet.
So let's parse this through. On the one hand, so you have this macro risk. Does that create an incentive to dive into the heavyweights, the Novo Nordisks, the ASMLs, et cetera, the equivalents of your Apples and Microsofts in the States? Or does this create a kind of more of a play around the companies that have government stakes in them, for example, or government contracts associated? How do we think about this?
Don't know. That's not my job. Portfolio managers have got to figure that one out.
Give me something, guy.
But if you take, but to your point about the euro, look at what is happening. Look at what that is telling you is that money is leaving Europe.
Or it's just FX people. Okay, this is a longer conversation.
Fairly straightforward, but money is leaving Europe. People have made, it's not a kind of where in Europe, it's a Europe versus the United States question. I think a lot of people will be looking at. Anyway, European equity markets are now open. We are expecting things to be fairly flat this morning. I think that's probably going to be the early narrative. The FTSE 100 may be reflecting that at the get-go of trade. We are barely budging. We're up by 0.1%. We'll see where the traction comes, to Kriti's point, kind of where if you are thinking about rotation within Europe, where are you rotating to and from, I think is a difficult one. You've seen obviously a big move away from the banks, big move away from some of the companies that have state-owned risk. Vinci is a name that instantly springs to mind out of France in terms of what happens with the highways. But is it that straightforward? The market's just going to go, this can have a Europe effect, not only a French effect. Therefore, we are, to be to Manthi's point at Citi, we downgrade Europe in its entirety.
Well, this morning you are seeing some green on the screen as well. Your heavyweights is leading the charge. Your ASML, of course, is moving higher. It looks like I want to before I say this, I want to double check. ING, for example, also higher by about 2.3%. This is one of the companies that Joe was talking about as well. To your point about the downside, you're seeing a lot of commodity names on the downside. Rio Tinto, for example, Glencore, Anglo American as well. The one that's catching my eye though is Total, and the reason I bring this up in the context of France is because weren't they very, very vocal about trying to move that listing out? I'm curious how this changes or even reinforces that dynamic when it comes to that listing story.
I don't know how any of these parties would react to that. It'd be interesting to see how the left would react to that. They
probably want to just buy the whole thing, wouldn't they?
Well, I don't know is the answer, and I think that's the problem. But to Kriti's point about what's happening on the commodity side, that's got to be China being priced in this morning, Tom.
Yeah. So the data we talked about, the fact it's mixed data. For me, it's really just a reminder. It's the property data. So yes, retail sales came in stronger. So it's just maybe the consumer is starting to feel a little bit more confident.
Very marginal, though, doesn't it?
It's very marginal, and the consumer's really not going to get on the front foot until the property crisis is resolved. And we got reminded that we're a long way from that, with new home prices falling the most since October, the end of 2014. They just have so much more work to do. And the constraint, it takes us to the Fed as well, because the constraint in terms of what the PBOC can do to lower rates, to some extent, they are hemmed in by the higher rate policy of the Federal Reserve. But yes, for me, it was the property crisis. So that's what's dragging on things like iron ore, taking a hit. So we'll look at the miners on the back of that. So iron ore under pressure, and to some extent, you can expect that the oil price story as well is somewhat linked to that
Rio's
data.
down, Anglo's down, Glencore's down. So all of those stocks certainly seeing losses this morning, to Kriti's point.
But they've also been the leaders in the past, I want to go, a couple of weeks as well. You've seen this major bid into the commodity sector off of the macro that you saw as well. And Total, by the way, I was talking about it, raised to an outperform at Grupo Santander this morning to an outperform from neutral, a price target about 72 euros, so a 17% increase from the last close. So we're going to keep an eye on that. In the meantime, we are talking about this larger geopolitical story. How do you actually play it? Beata Manthe over at Citigroup, as we've said, downgrading Europe this morning. Here's what she had to say on Friday about navigating the risk.
Elections in France tend to be more volatile for equity markets than other developed markets. So that's number one takeaway, that perhaps this volatility could continue for a bit longer around French stocks, right? It doesn't change the underlying story of recovering EPS and recovering GDP in Europe.
Beata Manthe there of Citigroup talking about some of the sectors that she sees weakness in. Let's get a little bit more on this. We're joined now this morning by Bloomberg's deputy team leader for European equity markets, EMEA equity markets, I should say. Michael Masika joins us on set. Now, before I let Guy dig into you, what gets
I'll be okay,
investors,
don't worry.
What gets investors excited about Europe again, given that right now the narrative is all about the sell-off?
First of all, it's a small sell-off. There was no panic last week. That's the first thing I want to say. You had some exposure trimming, definitely, especially on French equities, on stocks.
That wasn't panic, what we saw in France?
No, that wasn't panic. Yeah, I'm going to tell you what is panic.
Yeah, what does panic look like?
Panic is 1981 when Mitterrand became president of France and the CAC lost 30% in the first week, the equivalent of the CAC.
Oh, come on. That was like 40 years ago.
Yeah, the guy was in his 30s at that point.
But that's panic. And I was born.
Let's not rub salt in the wound. But still, a 5% drop in a week. I mean, come on. That's almost a technical correction. A mini one at least.
That's a mini correction. Yeah, that's a mini correction. I mean, as you can, the index got straight away became oversold in a week. There's a bit of rebound today, so people are kind of okay, I don't know what I'm going to do. What you do in market usually is you sell first, you ask question later. That's what people started to do. You have uncertainty, you don't know what's going on. Say, okay, you know what? I'm highly exposed. That's the thing. We came into that week, we came into June with a very high exposure to European equities generally, and French equities especially, banks, a lot of exposure on banks. And so when you have something like that, you trim your exposure, especially since you've been making tons of money on that bet. So you have to put that into perspective. So it's not panic selling, it's definitely trimming, reducing exposure, and wait and see.
Do I get to go now?
Go for it.
Okay, let's get back to Mitterrand. And the 80s. The 80s were fantastic.
Told you.
Were they? Were you there?
Yes. If the left wins, say the left comes through strongly, how far through this process of understanding what is going on are we? At the moment, as you say, it's uncertainty, it's not risk. We can't quantify it. We don't know what the left's going to do. We still don't fully understand what the right would do ultimately. Maybe some more clarity there. If the left start to poll more strongly and the left comes through this with the ability to form a government, was last week the warm-up act? What would that look like if you start to get some certainty around the left?
So the first thing is those legislative elections are highly unpredictable because it's a two-round election.
Yep.
It's very, very hard to assess what's going to happen between the two rounds. Coalitions, etc. I mean, what comes out at the moment is that regardless, we're going to have uncertainty because it's very unlikely there'll be any majority coming out of those elections. It's going to be a relative majority. So it's going to be hard to govern. And that's what people don't like at the minute. And that's what the market doesn't like. And that's what the market won't like after this election as well. So we need to have more certainty about the policy. Now, regardless if it's like far left, far right, or if the center wins again and manage to get a government, if you get like a Macron 2.0 or whatever, we'll have like a place where like the country is highly divided. And it's going to be hard to pass reform in any case. So now people are waiting to see if we're going to see, whichever party coming in and how the policy is going to evolve, because the policy will evolve. I mean, you've seen it in England. Liz Truss didn't hold her post very long because, the policy just didn't do it for the markets and the market won in the end. Just because you have those constraints. I mean, France has a huge fiscal constraints as well. They've been downgraded by S&P. It's a tricky situation. So the margin of the stuff that they can do is limited. So, and I think the market will come to that at some point. I mean, in history, those sell-offs before elections are usually some of the best buying opportunities. So you will have some of that as well.
With the spread at about 80 basis points, and Ven Ram from our Markets Live team suggesting it could go to 100 basis points, how should we be thinking about the ECB and how they're interpreting this? Does it change our estimates for the ECB, if we have any?
Well, first of all, the spread, the French, the OAT bond spread, the widening is mostly due to the German yield coming down rather than the French one going up. So if you look at it like from this perspective, it's like the risk that is priced into France, is higher than it used to be before that snap election call, but it's not crazy. It just went up gently. It's the German bond that went down, just because the risk is shifting. So you go for something that's less risky, and that's what's going on here. So unless we see like a huge spike in the French yield, which would be like a clear pricing of like major risk, I say that there shouldn't be any impact on that.
In terms of the rest of Europe, what is the contagion? How do we think about France in Europe? How do we think about the perception of US investors of Europe when they think about what is happening here? Is France limited to France? What is the spillover effect? And if you're sitting on Wall Street, do you just go, to your point about kind of running home to the Bund, do you just, do I stay in the why would I park money in Europe given the uncertainty?
So first of all, in terms of contagion, there's one thing. The French equities are 40% of the Euro Stoxx 50.
Yep.
So that's like, mathematically speaking, the contagion is there. If you sell French equities, you're selling European equities, because the Euro Stoxx 50 is the most traded index. It's the one that you trade when you trade options. It's the future you trade. It's like everywhere in the world, this is the benchmark. So there is contagion here. It can't be denied. Now, for the perspective of foreign investors, I mean, Beata was saying it, Beata Menti from Citi was saying it, and that's the reason why they downgraded Europe today. It's general uncertainty. They don't like it. Foreign investors don't like it, so they'd rather go for something safer.
Do you just buy European vol then? That's picked up. So what are the hedges around this?
Yeah, so definitely European vol is one of those things. I mean, it's something we've been saying in the taking stock column pretty much for the past couple of weeks about, like, volatility is so low. This is the time to hedge, basically. And so the people who did that, they were prepared, and the one who didn't, now they want to hedge, but it's much more expensive. The cost of a put in Europe has shot up like massively. Yeah. So, yeah,
you buy protection when it's cheap.
Exactly.
When the sun is shining, not when the rain has started.
Exactly. I mean, even if it costs you a bit of money to carry, now it's more expensive. But it's still, it's still quite low.
Relative to history, yeah, definitely. Michael, always good to see you. Perfect person to talk to on a day like today, a week like this. Maybe we'll get him back a few times. Michael Masika, thank you very much indeed. OK, let's figure out what's happening with the Core 6. This is what the big stocks look like across Europe. As Michael's been pointing out, a lot of these stocks obviously do have a French influence. Look at LVMH, look at Schneider. Both stocks are higher this morning. It's going to be interesting to see where investors ultimately hide out. Let's talk about some of the other single stock stories that we're watching this morning. Joe Easton, over to you.
So we have actually got a bit of exciting deal news. This time we're over in the insurance space. Not too much going on in deals, but today we are seeing Sampo over in Finland announcing it's going to buy the rest of the shares of a company called Topdanmark, which is listed in Copenhagen, and that is sending that stock up 21% this morning on the Copenhagen Exchange. It's the best performer we've got on the Stock 600 today. Topdanmark does casualty insurance, car insurance, that kind of thing, a bit of a broader operator. So it is a bit of deal news there. Sampo coming down around 3%, potentially a bit of a premium paid out for that one. Hargreaves Lansdown, we're watching that ahead of the deadline for the Abu Dhabi-led group to make a bid. That's on Wednesday. And then Vista Alegre, only up 1.9%, maybe expected more from that Ronaldo investment. Portugal play tomorrow, but that one is gaining around 2% at the moment. Cristiano Ronaldo taking a 10% stake in the glassware maker. In terms of ING, that is a decent move, up 2.3%. They've got their capital markets day today, and they are giving some really bullish numbers on their capital outlook that we discussed earlier in the show, targeting at a 14% capital ratio. Potentially that will benefit their buybacks going forward, and that stock gaining today. Then miners, you already touched on those, seeing iron ore once again down sharply, and the copper price as well, heading towards a couple of months low. And we are seeing some of the mining stocks in London in particular, where most of them are traded, coming down today. Rio down 1.4%, Anglo weaker, a little bit of movement in Glencore and Anto as well, so all pretty much red. Then staying in the UK, just a quick look at home builders, because we did get the latest Rightmove house price index over the weekend, and house prices in the UK are actually at another record according to that data. They did tick up in the latest year-on-year period, but interestingly there was a small decline in London house prices, which isn't something you see too much of. But there's Taylor Wimpey, Berkeley, Persimmon and Barrett all gaining at the moment. Only small gains in those stocks, but a decent number of green shares on the screen. In terms of a couple of ratings changes, SSP, this one absolutely slammed at the open of trading as Goldman cuts it to sell. It was down 5% at the open. This is the airport catering company we know from their upper cross business in the train stations as well. But Goldman recommends you should sell that. Maybe a bit of weakness in the long-haul travel, something that we've seen recently. One more to bring you, Evertech. This is over in Germany. It's a biotech company, and Intron is predicting that they will issue a profit warning in the next few months because they think that there's competition coming from generics, and that's the second weakest one behind SSP on the Stock 600, down almost 4% for Evertech in Germany today.
OK, Joe Easton from our equities team, thank you very much indeed. Plenty more coming up, including Guy's interview with the leader of the Liberal Democrat Party, a party that could end up playing an outsized role post-July the 4th. Stay with us. This is Bloomberg.
We're the only party talking positively about engaging with our European friends and neighbours. We're talking about rebuilding that trust and relationships that have been so poisoned by the Conservatives. You know, when I talk to businesses, they say we're not investing in the UK because there's no long-term strategy, there's no real link up with Europe, and people are taking their money elsewhere. And I think that's really sad. And under the Liberal Democrats, you'd get a long-term, stable policy and we're so committed to that stability so we could tackle these issues about the problems with regulators, get better trade deals. That's the sort of climate that would attract investment. You know, when we were, for example, in government and running the energy sector, we saw tens of billions of pounds invested in the UK because of Liberal Democrat policies. We introduced contracts for difference, which were transformative in improving our electricity system and making it go low carbon. And that system of financial instrument was copied the world over. So I'm really proud of our record, I'm proud of our policies, and I'm particularly excited because in places like this, maybe a bit windy and a bit blowy and a bit rainy today, but the sun is shining on the Liberal Democrats.
I'm just waiting for the thunder to start, just to add to that chorus that you're speaking about. So basically, I can say with a degree of certainty after having heard what you just said that a vote for the Liberal Democrats is a vote to rejoin the single market. Is that pushing it too far, or is that fair to say?
Well, what we are saying is we're realistic about the time scale for that. It can't be done overnight. Yep. We've got to rebuild that relationship with our European colleagues. When I've spoken to European politicians like Christian Lindner, the finance minister of Germany, he says, look, there is a trade on the table. It falls a bit short of the single market initially because I'm afraid European friends don't quite trust the UK any longer. And who can blame them, given the way the Conservatives have broken the rule of law and treated our European neighbours? So we've got to build that friendship back. You can do that with a good trade deal to start with, and gradually over time we have a four-phase process that could get us back into the single market, but it may take a while.
The thunder came shortly after this interview. That was Davey, the leader of the Liberal Democrats, speaking to me on Saturday in Esher in the heavy rain, talking, though, about a theme that does seem to be beginning to emerge within UK politics, and that is the relationship with Europe. At the beginning of the campaign, it feels like it's been largely relegated, left on the sidelines. But it's interesting, this morning, the FT website's Rachel Reeves to seek a, quote, improved UK-EU trade terms if Labour to win the election. Is that a conversation really about rejoining the customs union? To many people, that is something that could potentially be on the table were Labour to win. The Liberal Democrats obviously maybe taking one more step than that, and maybe talking about the single market. It's an interesting conversation. It's one that's beginning to emerge. I've been surprised at the beginning of this campaign that we haven't seen more of a conversation about the relationship with Europe, given how important Brexit has been in the economic data that we've been seeing.
Well, it was like Voldemort. It's like the topic that shall not be named up until now. As you say, so it's interesting it's come to the fore. Look, if you want that growth, 4% hit to GDP on an annual basis, £32 billion per year in the long term is the estimate from the OBR, the Office of Budget Responsibility. If there is one point of vulnerability for Labour and its plans that really stands out, it's how you price and how you answer the question about how you continue to fund the public sector. And they say growth. Well, if you really want growth, you rejoin the EU and you get that additional 4%, would be the argument from some.
Well, speaking of that growth, there's a chart I want to bring to everyone's attention because this is one that hit in the Brussels edition coming out of Bloomberg this morning, talking about what that business investment actually looks like in the UK on a quarterly basis. Now, stick with me here. You can basically see that on the right side of your chart, you haven't made that much progress since the Brexit referendum. That's that purple line or purple dot right there about in 2016. But compare that to the kind of carnage you've seen since the pandemic, since the great financial crisis, and, of course, since those new UK-EU trade rules in yellow as well. Laterally, net, it hasn't been that much growth post-Brexit. I thought this chart was really interesting because I've never really visualized just how little progress has been made.
Yep, it's been sideways. It's been stagnation. It's been better than anticipated in some ways, but it has been stagnation. And to Tom's point, the Labour Party's trying to figure out a way of not raising taxes, not increasing the burden, but increasing the perimeter, increasing the growth story in order maybe to drive some of the spending. Let's carry on the conversation. Moena Cunningham joins us now from our Markets Today blog, focusing on the UK. The EU conversation's beginning to make an impact. Davey's been talking about it. The Labour Party's now beginning to address that. Why is it suddenly, do you think, starting to come to the fore? And how significant do you think this is? Is this actually a step change, or is this something that will happen over time, will happen gradually, is an aspiration rather than an objective?
Well, I think that's an interesting question because, you know, looking at the polls, looking at what the parties have come out with in their manifestos over the last week, it's not the main talking point. You know, they're much more focused on domestic policy, so things like housing. Ed Davey is mainly talking about the NHS a lot of the time. But today we have seen them saying, you know, that the UK does need closer ties with the EU. You know, businesses do need that. And we've had Labour Shadow Chancellor Rachel Reeves saying, you know, that they want to have this sort of open window to Britain being open to business. And there is a big push to try and get, I think, the business community and the international business community back on board with perhaps some of the more anti-EU rhetoric we saw before, and particularly when you're seeing, I think, a swing to the right from the Conservatives in response to reform, that perhaps comes into play even more for the other parties.
In the same vein, we also got, as of Friday's close, I believe, that the UK stock market is now bigger than the French one as well. At the same time, they're losing a lot of momentum in terms of things like listings, et cetera. How long does that crown really stay on the UK financial market's head?
Well, that's a very good point, because, of course, it's less than 2 years since it gave that title to France in the first place. And it's not necessarily a UK positive story. It's obviously France has got their own political turmoil, and that's really what's driven a rout in French equities, which has allowed the UK to sort of reclaim the title. But there is a positive news story there. You did mention companies are leaving, but at the same time we have had one IPO from Raspberry Pi. And there is actually some inflows into UK stocks, particularly with global growth. So a lot of those export-dependent companies have been doing very well. And there's also been quite a bit of M&A activity. So there is some momentum, which is a UK story, as well as it being the negative story somewhere else, so to speak.
Where is the focus for you when it comes to the Bank of England decision? Guy started the show by saying it's probably less consequential than the politics of particularly of France. What are you and the team looking at when it comes to that decision? What we're going to hear from the BOE?
Well, we will be looking, obviously, at inflation, particularly, you know, the
which
next
drops on
data.
Wednesday, doesn't it?
Exactly. You know, that has always been the key driving force for the Bank of England. I think it's also, it was not expected that there will be any change, you know, this week, but we would next week, we would expect there to be some forward-looking commentary. And as we've seen, you know, the Fed slightly changing course, and we've seen the EU pulling back potentially on its own bank rate decisions, I think it will be really interesting to see what level of divergence we should expect from the central banks.
OK, Morwenna, thank you very much indeed. Morwenna Coniam from our Markets Today blog. You can get more analysis, of course, from Morwenna, the rest of the team, by going to T-Live Go. There's a redhead crossing the terminal just in the last few minutes. China launching anti-dumping probe into EU pork imports. You would assume that this may be part of the retaliation from China to those tariffs that the EU has put in place on, of course, Chinese EVs. Consequential, of course, certainly for markets like Denmark, I would have thought, a big producer of pork, of course. So China launching that probe into anti-dumping probe into EU pork imports, and of course tariffs could follow as a result of that. Plenty more coming up. Stay with us. This is Bloomberg.
Monday the 17th, welcome back. 30 minutes into the equity market session here in Europe. Equities generally well bid in Europe. We're up by 0.6% across most of the main markets. Keep an eye on what's happening with the bond markets, though. You are seeing the OAT Bund spread widen out. We've hit 80 basis points this morning. That is a factor that we are going to keep a firm eye on as this week progresses. French politics absolutely dominant. But let's throw an extra element into the uncertainty story that we are covering this morning. We're now starting to get maybe a little bit of colour on how the Chinese are going to be reacting to those EU tariffs on the car sector that we saw last week. Pork sector looks like it could be in focus. It could be a focus on the Spanish pork sector. I'm assuming this means Iberico. It's the upper end of the kind of the pork industry. Yeah. I guess you could argue. Once again, the Chinese are going to look to European luxury as an area of focus to respond. Yeah,
look, they've said they would retaliate to these tariffs that the EU put on EVs. As you say, this seems to be the opening salvo in that. This gives them the optionality, of course, to put tariffs on these pork products. And as you say, Spain, the biggest exporter of pork to the Chinese market, they have launched this anti-dumping probe into EU pork imports. So we'll see how this evolves. The challenge for China is that they are also trying to chart this and create this narrative that China is indeed investable. They're trying to drive that foreign direct investment back into the Chinese market. So it's a difficult line for China to play at this point.
Well, I'm curious why they chose Spain in particular, given that, and I think we talked about this in the break, that Germany's pork industry is already under a ban from 2020. In your view, in your expertise, why Spain?
Well, I'm not sure that we necessarily draw the conclusion that it is Spain, as we say, is the biggest exporter to China. So they're going to, it seems, consequently, they would take the biggest hit. I'm not sure necessarily the thinking within the powers that be in Beijing would be let's target Spain necessarily. But as Guy says, is the higher end products they can hit it's going to be a hit to consumers in Shanghai and Beijing and Shenzhen. Prices will go up in terms of these products if they can get hold of them at all. That's not a part of the demographic that the Chinese policy makers are overly concerned with, let's say.
Can I just say our production team has done well to produce pictures of pork.
Yeah. And China has a pork surplus right now, so they can if it's the your commoditized parts of the pork market that we're importing from Europe into China, they can manage that without the risk of inflation.
But what I think is interesting is, once again, it'll be the high-end spirits manufacturers that you're going to watch out for. It'll be the Iberico ham. It'll be those kinds of luxury products that Europe is well known for and will have a disproportionate impact in terms of the effect that they will have. This will make headlines. This will be something that the Spanish will talk about. It will be something that resonates in Europe, and therefore you get a kind of bigger bang for your buck in terms of how you're responding.
Absolutely, and French cognac is part of the mix as well in terms of the threat potentially to French cognac as well in terms of spirits and luxury. For more on this and the context, let's bring in Oliver Kuruku now. I know has been charting all of this for us as well and keeping a close eye on it. Ollie joining us out of Berlin. Ollie, what is your assessment of what we've been hearing from China? Not a big surprise that they come through with some form of retaliation, but it's the type of retaliation that they've reached for.
Yeah, Tom, there were some early whispers about this, kind of some rumored reporting within Chinese media. The moment the EV tariffs dropped, we started to get sort of certain rumblings on potentially the pork market would be something that they would look at. And it appears that sort of in retaliation, this is sort of the lever that they are looking to pull. As you can see, I mean, I'm more sort of comfortable on this sort of terrain of EV markets, but I've just been reliably informed that apparently they import 1.55 million tons of pork last year, about half of which came from the EU, with Spain as the sort of largest supplier there. So, again, these are all just sort of incremental little bits and pieces, and we'll go to the market action. I've been pulled up lean hogs, which I discover only opens at 9:30 New York time, so I'm sure you'll be looking at the futures for that when it opens up. But really, it's sort of, what is the takeaway here? The takeaway here is that you have this opening salvo by the EU on the EVs. Now we're looking at retaliation, and really the question is this just the beginning? Are we in the foothills of what is effectively going to become slowly a trade war? And this is the big question for a lot of people. And as sort of each of the different blocks erect trade barriers to try to prevent some of these sort of cheaper items from coming in, what I think the EU needs to worry the most about is how much faster the United States can move on those, how much slower the EU is, and as a consequence, how much slower and how much more of a target the EU market is for a lot of these Chinese exports.
Well, Ollie, when we tend to see this kind of retaliation, if you will, in terms of EVs and now pork, what's the next step? Is there another sector we should be watching on either side?
Well, listen, I think as you guys have been mentioning, again, when we look at sort of the sectors that are vulnerable to the Europeans, a lot of it comes down to this sort of luxury trade. I mean, even within EVs, right, a lot of the European companies have joint ventures within China that are sort of within the trade wall of China. What is not within the wall of Chinese trade are the really, really most expensive cars. Like, for example, Mercedes-Benz, they make their Maybachs in Stuttgart, right? And these are the ones that they ship from Europe into China. When the trade barriers comes up, it starts to hit that. So I think for the sort of auto sector, I know this because I was speaking to sort of senior members of these companies last week when all of this came out. What they're really looking at right now is their global manufacturing footprint. And I think that for the EV sector, if you take a step back, if they need to start producing more and more cars locally, that is also going to pull out a lot of different models from the market. So this will have sort of huge repercussions, certainly for the auto industry. But if you start to see this trickling into other industries, you're going to see that dynamic play out across a lot of different products.
Are these the same sectors, do we think, Ollie, that Europe is worried about when it comes to potential Trump tariffs as well? Say the Republicans were to win in November, similar sort of areas in the past were hit by Trump. And I'm wondering whether or not we could have the potential sort of double effect of China hitting them and also the United States hitting them. This, as we think about kind of what has supported European stock markets over the last few years. Yes, it's been Novo Nordisk. Yes, it's been the healthcare sector. But luxury has been the area you could argue that has really outperformed. Seems like an obvious target.
Yeah, and completely, Guy. And this is sort of goes at the heart of a much bigger and more existential question for Europe, right? So there is the question of the stuff that they export and that they send out to the rest of the world. Obviously, Trump coming in is a bit of a wild card. He's talked about just throwing up tariffs kind of willy-nilly. And this would obviously have an impact here on Europe. But I think what it brings into the fore, Guy, which is not just about the exports, but it's about European competitiveness. And you guys have been talking about it earlier in the show. This is what Mario Draghi has been squarely focused on. And within these sort of discussions, even at the sort of highest level of the sort of EU kind of technocrats like Mario Draghi, basically openly advocating for subsidies and tariffs, not sort of excessive, but to basically level a playing field where you're seeing basically these three major blocks of the world, China, United States, and Europe, fragmenting and just sort of going for their own sort of personal competition. Now, if you throw in sort of more tension between Europe and the United States, that makes the conversation about European competitiveness all the more urgent, one that is frankly such a slow burn that policymakers in Europe, I think, really challenge to make the very difficult decisions that are required to keep Europe competitive.
Ollie, in Berlin, thank you very much indeed. Oliver Crook in Berlin, thank you very much indeed. That's the story, the bigger picture story surrounding Europe, what is happening when it comes to its place in the world. Within Europe, though, French politics absolutely front and centre right now. Far-right leader Marine Le Pen says she won't try and push out President Emmanuel Macron if she were to win the country's snap parliamentary election. That would be an interesting dynamic, though. And then we think about what is happening with what is going on with the left. So officially campaigning starts today. Are we going to start to gain more clarity in this hastily called election when it comes to some of these big blocks? Let's get the latest now from France. Let's go to Paris. Caroline Conan standing by. Caroline, we had a busy weekend in France. Campaigning now officially begins. Talk to us about what we saw over the weekend and what it tells us about how this election could unfold.
It's very interesting, Guy, because what you saw over the weekend were 640,000 people protesting against the far right in the streets. That's according to the CGT union. The number was smaller. If you look at the police, they were saying it's 250,000 people only protesting across the country. And really, if you put this into context, remember 2002, Jean-Marie Le Pen versus Jacques Chirac in the second round of the presidential elections in France. You had 1.3 million French people protesting against Jean-Marie Le Pen in the streets, according to the police. That's 5 times more than the numbers you've seen in the streets over the weekend. So that clearly tells you that a lot has changed in France over the past 20 years. Clearly, Le Pen's ideas, with Marine Le Pen trying to detoxify the National Rally, the far-right ideas have slowly spread across the French population, and now she is not seen as such a threat as her father used to be 20 years ago. In this Figaro interview over the weekend, she tried to play nice, saying there's not going to be any institutional chaos, that she's going to work alongside with Emmanuel Macron, clearly an appeal for the moderate right-wing electorate who is still hesitating 2 weeks before the first round of these legislative elections.
So that's the right-wing part of the story. What about the left wing and the flank and the challenge for Macron? What are the polls telling us, Caroline, about how his party is now positioned given the challenge from the left and the right?
The polls are saying at the moment between 33 and 35% for the National Rally in the first round, and the union of the left would become the second bloc, getting about 25-26% of the votes in the first round on June 30. And then Macron's party would become the third force between 18 and 20% of the vote. So that would translate into at least 200 National Rally MPs in the National Assembly, but short of a majority, meaning that Emmanuel Macron, if he doesn't want to end up with Jordan Bardella as prime minister, will have to extend a hand to the moderate part of the union of the left. Now, clearly at the moment, that's not the case, because the far left is part of this union, and that's going to be a turnoff for a big part of the moderate left wing. We'll see if this union actually holds together. There were already a few cracks over the weekend on some constituencies. We'll see if this actually holds together until the first round and after July 7.
Caroline, walk us through some of the policy implications, though, here. Walk us through the main measures we need to keep an eye on.
We spoke a lot about what the national rally means in terms of fiscal uncertainty, in terms of impact on the markets. In fact, the national rally hasn't detailed yet their economic program. And Marine Le Pen said also over the weekend that, in fact, electors are going to find out that it's more reasonable than we think. But one of the main measures they want to put in place at the beginning is to lower VAT on energy. That alone would cost at least 20 billion euros, according to the French Finance Ministry. Now, if you look, of course, at the Union of the Left program, they also have very costly measures. They also want to abandon Macron's pension reform, also the unemployment benefits reform that's just going through Parliament as we speak. They want to lower the retirement age to as low as 60 years old, and to block the prices of some essential products. So, of course, a very costly program. Emmanuel Macron over the weekend said that both programs would actually make the French poorer.
Caroline, thank you very much indeed. Caroline, going on what is happening with the French election. Campaigning officially starts today. We are going to keep a very close eye on how that story progresses to the first round. Coming up, traders are eyeing decisions from the Bank of England, the SNB and the Norges Bank this week. We're going to break down what you need to know ahead of Thursday's trio of meetings. That is all coming next. This is Bloomberg.
We're in a very good position right now to take our time, get more inflation data, get more data on the economy, on the labor market before we have to make any decisions. So we're in a strong position. But if you just said there's going to be one cut, which is what the median indicated, that would likely be toward the end of the year.
It's going to take some time to get inflation back to 2% all the way back. So my projection is that we probably won't get there until 2026. But we'll see progress continue in my modal view. And that's enough, right, to then say, okay, it's time to start the process of bringing rates down.
We're going to get to 2%, I'm telling you. That is what we're going to do. And we, you know, if you look at the last month, we did it. You know? but that's what we got to do. And we are going to do it.
OK, lots there from Fed speakers, of course, US Fed speakers from the regional Fed presidents, including Kashkari, Mester and Goolsbee at the end there. Let's bring in Bloomberg M-Live strategist Noor Al-Ali for the latest take in terms of how the markets are interpreting what seems to be a bit of a divergence between Fed speak and the data that we've been getting, Noor.
Yeah, absolutely. And, you know, I think it's up to the part of how markets are looking at, you know, the latest updates from the Fed's dot plot. I know overwhelmingly we had one cut priced in by the Fed, but I'm looking at swaps tied to meeting dates for the ECB and the Fed as well. And I'm looking at about 46 basis points priced in for December. That's almost two 25 basis points for fully priced in for the Fed. The markets aren't buying that narrative just quite yet. And I think that's very interesting as the Fed continues to push back. Obviously, you've had some speakers as well and FOMC members that say, well, look, I think we'll potentially get 2 cuts this year. So that's not completely out of the picture yet. I suppose now we're just waiting to see at which juncture will the Fed look to say, well, you know what? We're ready now for that second cut to come in. And the markets will potentially rally even more on that, right? You've seen that stock market rally. It's been incredible, Kriti.
Yeah, Noor, the connective tissue, I think, is so interesting between both sides of the Atlantic. When we're talking about this bond sell-off in Europe, or arguably what Michael Masika was saying is a bid even into bonds, but creating that widening, what's the connective tissue into treasuries? Why does it feel like to you that the Fed and therefore the U.S. bond market is kind of insulated, whereas, say, a year, 2 years ago, maybe it wouldn't have been?
Yeah, look, I mean, the risk of contagion and that fear of where is that going to trickle to next is on everyone's mind this morning. We saw Friday really that French bonds really sell off, bonds rally in relative, as in a haven demand, even the dollar, and I would say, and you can look at FX as well, the Swiss franc also rising against the euro now at levels that make it a little bit uncomfortable for the SNB as they meet later this week as well. So there's a lot that's tied in there. And I think when you look at treasuries right now, really the dominant story there is that economic resilience out of the U.S. economy, how the jobs market is still quite tight. You still have inflation. It did ease again, so we did see that, that pairing of price pressures. So I am expecting now to get a bit of a dynamic here where yields continue to trek higher because we're still at a dynamic that's showing that resilience in the U.S. economy that's pushing the Fed into a corner that says, well, look, we don't really need to cut yet. The economy hasn't given us incentive. And now I'm a little bit more concerned about the Fed being a little bit behind the curve and sending those yields a bit higher. And then that creates a dynamic where the dollar is much stronger than it should be. Stocks will then potentially start falling because markets will start panicking on the idea that the Fed is too late, economy is starting to crack, and that's going to start showing up in balance sheets for companies. We're not there yet.
I was about to say, we are not there yet.
Yes.
And the problems are over here. So the US remains an area of safety versus Europe versus other parts of the world. Does that mean that the bar is even higher for risk to emerge? The risk needs to be even greater out of the United States for you to take your money out of it. It needs to be far greater in the United States to take money and put it into Europe. The bar seems to be getting higher and higher to take money out of that economy and put it to work in the rest of the world.
I absolutely agree with that, Guy. And if you look at the U.S. Stock market at the moment, I know we've talked about concentration risks in the past, but right now you have, the Magnificent Seven, as we call them, really, really leading that rally. And not all of them, mind you, as well. NVIDIA really taking that, the gains of the wider stock market on his shoulders and really carrying through. So I'm going to ask you a question now. We're all very happy. Momentum is going there. But what happens when NVIDIA starts to disappoint? Is it just an NVIDIA problem?
I think I saw a note from Torsten Slot, which I'm sure I can dig out, and it'd be great if Torsten's watching. He could re-ping it to me right now because that would be helpful. It's something like 30% of the gains, the market cap gains in the S&P this year have been on NVIDIA, so the arithmetic's fairly straightforward. If NVIDIA rolls over, the S&P's got a problem.
I don't think it's rolling over just yet.
No, I'm not. I'm not. But you raised the question about what would happen if that were to materialise. There's a lot of weight being carried on NVIDIA's shoulders right now. There hasn't been the breadth that has emerged, that there was the anticipation that would emerge. That hasn't come yet. Look at what is happening with small caps.
Exactly.
That's the message.
Yeah.
The message out of what is happening with small caps is pretty clear right now, and it's not telling you good things about what's happening with the underlying economy.
Yeah, absolutely. I mean, if you take out those gains from the Mag 7 or NVIDIA, you'll see that actually the small caps index hasn't been doing very well. It's not been rising. So what does that give you about market breadth? I think, but we go through these cycles, right? Right after the earnings cycle, we tend to go through these lows, and it's really cyclical, right? So we're very optimistic into earnings season. Earnings come and we think, oh my God, look at these companies. They're doing so great. They're doing very well. We're going to carry those gains. NVIDIA comes really propelling those gains higher. And then that kind of fades and you get the Fed speak saying, well, we've got to keep rates high for longer. The dollar is quite high. Yields are surging. So then companies that are small caps that aren't as appealing to investors will start, lagging in a sense because investors start thinking, well, maybe I am too overweight on stocks. Maybe I need to find a way to do risk. And so I think it's a really balanced sheet, but you can't go away from the momentum into the summer. I think it's a summer of gains for stocks and potentially even yields higher. So quite interesting, actually.
All right, Bloomberg MLive editor Noor Al-Ali joining us this morning. We thank you so much. Of course, she was talking about some of the central bank speak that we were watching. There's plenty ahead going on this week. We've got Fed speak and ECB speak. Harker and Lane both hitting the wire. We've got plenty of data as well. Retail sales, euro area CPI. But it's really about that central banking story. All eyes on the BOE. We've got the RBA on Tuesday. And, of course, the Norges and S&B rate decisions as well. Let's bring in someone who's going to be watching this very, very closely. Jamie Rush, Chief Bloomberg European economist from our Bloomberg Economics team, joins us. Jamie, a pleasure to have you on the program. We've got the BOE. We've got the S&B, Norges Bank, RBA. A lot of focus, of course, on what the BOE is going to be doing. But what's the game changer? What's the surprise factor that we may be waking up on Friday being kind of blown away by?
Well, I mean, clearly the most finely balanced decision is in Switzerland, where I think economists have pretty much broadly split on the likelihood of a rate cut. So if you're looking for a surprise, I suppose it's there. I mean, our own view on the SNB is that, I mean, rates are what, 1.5%? There's clearly not that far to cut for the central bank. So there will be plenty of time and space, really, for them to hold if they want to, and that's what we think they will do. The risk, though, is that these developments in France that have seen the euro tank against the Swiss franc are creating disinflationary pressure in the Swiss economy, and that they may try and get ahead of the curve there and cut rates against expectations. But I think more broadly, we're looking at a picture of stasis across the other economies, right? So Bank of England, election coming, now is not really the right time to make a major change of tack on policy. CPI's come in too strong for them, especially the services data, which is looking really hot. And unlike the ECB, they haven't boxed themselves in. They haven't said that they're going to cut, so they don't have to cut, so they won't. So I think we're reasonably confident very confident of a hold there. And Norges Bank, similar sort of picture. The economy is too hot, inflation's running too high. If anything, they're going to be looking very late in the year for the first cut there.
Jamie, I want to tie the politics together with what is happening with the central banks. We're starting to hear greater and greater commentary around tariffs. Tariffs, I would have thought, would be inflationary. How is the ECB, how are all these central banks thinking about the story around tariffs and how it's going to complicate their mandates for them?
Yeah, it's one of the big questions, right? We have this divide globally between countries that are relying on tariffs and countries that are relying on subsidies to kind of participate in trade wars. US, of course, doing both. Eurozone about to embark on tariffs on China with its actions to tackle EV subsidies in China. These things are going to have material but not huge impacts, direct impacts on inflation. I think, I mean, where the impacts really lie when you're thinking longer term. We're going to be imagining a world now where there's going to be a split, and we're going to see supply chains have to reorientate. We're going to see long-term but low-grade, persistently higher inflation, and that means basically that the natural rate of interest will be a little bit higher. That's the main channel.
OK, Jamie Rush from our Bloomberg economics team on the path for interest rates. On another big week, of course, of the central banks, European stocks have paired some of their earlier gains, now just up 0.2%. That is it for markets today. The Pulse is up next. This is Bloomberg.